Hello everybody, welcome to the Technical Analysis webinar here with AvaTrade. My name is Troy, I'll be presenting. As we get started, let's do a quick systems check. If you would, type OK in the chat box if you're hearing me clearly and seeing my screen all right. Just waiting on a few more responses to make sure everyone's up and running okay. All right, great. Looks like we're doing all right. If anyone has any issues as we go along, please feel free to let me know. As always, keep in mind that no trade is guaranteed to profit, no one trade, and each and every trade that you take has risk of loss. With that in mind, you want to make sure that you are managing your trading with a risk management plan that makes sense for you in terms of trade size, exposure to stop loss, or in some way managing risk that makes sense to you. The other side of that is each and every trade also has a good potential for profit, which is why we're all here, obviously, to try and look for smart ways to go after those potential profits. Now, keep in mind that what we cover is not meant to be financial advisement, but is coming from an educational perspective. Now, for anyone who's new to things, it's okay. And also for experienced traders, you won't be bored as we go forward, I promise. Real quick for the newbies, what is technical analysis? Basically, it's looking back at the charts, usually candlestick charts, to look at the price movements from the past to try to identify price levels that look to be important price levels and movements that look to maybe give away potential future movements. And so we're looking for trends, we're looking for support levels, resistance levels, etc. In the past movements, and then trying to make some predictions about what we think might happen with future movements. And really what's helpful along with this technical analysis is to also look at what's happening fundamentally, which the stronger the fundamental push, then the easier it becomes to use the technical analysis to your benefit, to your favor. Because, for the past week, we've certainly have trusted the support levels on crude oil more than the resistance levels. And so when you're doing your technical analysis, knowing that oil had a lot of bullish pressure because of the war situation going on in Ukraine and the fears of supply disruption with crude oil and energy in general, then it was easy to do your technical analysis and avoid false price levels that might have been false resistance levels and to trust the support levels to buy from. And that's just an example of how the fundamentals can go along with the technical analysis to hopefully improve upon your success rate. Now, we tend to use manual methods of technical analysis in the webinars, meaning we find our own price levels, we look at the candles and find the trends ourselves. You obviously can also use indicators. And indicators can maybe reassure you in your mind what you're already looking at, and also can maybe give you a starting point then to go and look at your own technical analysis. I tend to shy away from just trusting indicators blindly because they're also programmed and looking back at the candlesticks and really have no idea of the fundamentals that are going on, indicators being mostly purely technical in nature. So we do on occasion use an indicator, but we tend to lean on the manual methods mostly. If you have any questions, any input as we go along, please do so. And Henry, you're asking on some tips on how to recover losses. Well, it's the same as if you haven't had losses. You go about things in a way that makes sense to you from a technical standpoint and a fundamental standpoint to try and have a trading strategy that hopefully is winning at least slightly more than it loses. And you gradually go after things. In a general sense, if you have losses, maybe it's not the best risk management strategy to just try and gain it all back at once on one move. Although you could get lucky, you could do that. I'm not telling you you shouldn't. But maybe you try and ignore the losses learn from the mistakes in the past, but don't let those losses dictate your psychological state with your future trading, and try and stick to your trading strategy that makes sense to you, regardless of those losses in the past. Okay, but certainly trying to learn from the mistakes that maybe led to those losses. Now, even though this is a technical analysis webinar, you still have to pay attention to the fundamentals, right? And the fundamental analysis then is pretty obvious right now. What's going on? European stocks lower. We see the U.S. futures are red also. U.S. 30, U.S. 500. U.S. market's not open yet, but we see the futures are red. The U.S. 30 and U.S. 500. We see volatility is up right here. The VIX volatility index is up over 3%. That's up moderately. That's not a big climb. I've seen it up over 20% in recent times in one day. But the volatility in general is above 30, which traditionally, if it's above 30, it tends to indicate there's a lot of volatility on the market. But what we're seeing is the change in volatility is moderate right now. But certainly there's high volatility in the overall number that we're looking at 33.5 on the VIX volatility index. So that means there's a lot of fear on the market still, and actually slightly rising fear right now as well. And the dollar index reflects that as well. The US dollar has kind of been rising in lockstep with the fear. It doesn't always do that, but the US dollar in general is acting as a safe haven currency, being maybe viewed as a safer currency to invest in if you're leaving stocks and leaving crypto, that some of the instruments that are viewed as more risky, maybe the US dollar is viewed along with the Swiss franc and the yen as a somewhat of a safe haven currency. And that's what the trend that we've seen here is the US dollar index. The strength of the US dollar against a mix of other currencies has been rising. Okay. Now, the headline says European stocks lower, along with the US futures. There are Ukraine talks today, I believe, in Turkey. And there are some hopes that maybe some sort of peace agreement can be reached, but there's also a lot of fear that there won't be. The past talks have not gone well, and they've been on opposite pages. But in recent, I would say, hours or days, in the past day or two, there's been maybe some view that Zelensky is maybe willing to think about some of these, what Russia declared as autonomous regions in the Ukraine, to consider maybe some things about that Russia might like. And Russia has signaled maybe some willingness to compromise on one or two things. And so hopefully maybe something surprise happens and there's peace. Barring that, we could see a further pushback up in crude oil. We could see a further pushback up with gold if those same stimuluses that drove them up recently occur again, right? There's an if there. So you have to be prepared for either direction right now. Fundamentally, we don't know for sure how those talks will go. Many believe they won't go well. And if that's what you believe, then you know maybe what direction you would plan to trade. But you have to be prepared for the unknown in this situation with your risk management plan. Have your stop losses maybe in a spot that makes sense, or pending orders ready to back up your primary move to cover yourself if the markets go unexpectedly for you. And we know with war talks, we don't know for sure what could happen. I know neither side wants to keep losing thousands of soldiers, I'm sure, and private citizens in Ukraine as well. So hopefully something can be worked out. Now, we're also looking at the fact that the European Union has a central bank monetary policy statement today. Interest rate decision today. Now, before this whole war breaking out, there was the expectation that the US was leading the way, and then also the European Union, UK, other places, Australia, that interest rates would be going back up to try and stop some of this inflation, and to cut back on the stimulus measures. But now the thinking is, because of this war and the strain with these high energy prices and everything that it will put on the economies, that maybe some of these central banks are second guessing raising interest rates back up so soon. I say so soon, they've been ultra low for a long time, but maybe they're thinking about not raising them up as soon as they were thinking. And so it'll be interesting what's said in this monetary policy statement. The expectation is 0% interest rate will be maintained. We'll see what happens. I tend to lean towards that. That's what will happen. They'll maintain 0%. But many times, it's not what they do with the interest rate, it's what they say. And so you have to understand what they say in this policy statement could loom larger than the actual interest rate staying 0%. So if what they say is, hey, we're keeping it 0%, but we're going to raise it rapidly soon, then you could see a negative reaction with the stocks, the indices, the riskier investments that then would see that as a negative sign for those instruments maybe. And you could see a rapid increase in the currency strengths as people buy back into the safe havens. And so it'll be interesting to see what they say in the monetary policy statement. We don't know for sure what they'll say, but you have to be ready for these fundamentals, which are big ones, coming up. Both the regular type of fundamental news that's scheduled and also the unknown type, like the war that's going on. So in that backdrop, we've got a jittery oil market, which Reuters is saying in this headline. We don't know what OPEC might do to potentially increase their production maybe, but they're not committing to anything yet, the OPEC nations. I have to imagine they kind of like the high price of crude oil since that's what they're selling. So are they going to have mercy on the rest of the world and increase production and maybe hurt their own bottom line? I don't know. They've done it in the past with enough pressure from other nations like the US or UK, etc. I don't know that the US has the leadership to put a lot of pressure right now on the OPEC nations to get something done by leveraging other things, maybe some of the military equipment that's supplied to some of these nations by the US, etc. It's hard to say what the current administration in the US will do and other areas around the world in terms of trying to leverage OPEC to increase oil production. We'll see. The article here goes on to say even the UAE officials are giving differing views about output plans. So this is new to them as well. The OPEC nations, they don't know for sure what the best move is here, and they're trying to figure out what's best for their own country, not what's best necessarily for other countries. So we'll see. But we have to be prepared. What if OPEC announces, hey, we're going to increase production to backfill all the sanctioned oil coming out of Russia? Maybe that happens, and then you see Germany sanction energy out of Russia as well. We don't know. So what I'm pointing out here is there's a lot of uncertainty on the market. That was my point of all those headlines before we do the technical analysis. So when you do your technical analysis with all that backdrop, understanding that fundamentally, then you have to look for opportunities that look like opportunistic entry points that you could maybe take a profit before the news could change. That's one approach. I say you have to look for that. You don't have to look for that strategy, but that's one strategy that might make sense, right? To try and find movements that you think will bounce or reverse or break through soon with the current environment and then be able to take profit before the news can change. And so when you're in an environment where the headlines are changing by the hour or at least by the day, that could be an approach that makes sense. Now, certainly you can be in it for the long haul as well. I'm not telling you not to take long-term trades, but I'll show you some strategies now, technically speaking, that maybe go along with the environment that we could see sharp reversals and bounces and movements back and forth as this unknown situation is happening. Okay, so before it was a little bit more obvious that everything was going in one direction as the war was first breaking out, but now with talks coming up and what will OPEC do and what will the US do, will they supply warplanes, won't they, etc. Okay, there's a lot of unknowns and uncertainty, and the fear already made its move, right? Oil hit highs that it hasn't seen in a long time. Gold hit an all-time high and pulled back. So now we're kind of in a wait and see after that initial huge surge this past week. So let's take a look at the technical analysis and see if there are any opportunistic spots from a technical standpoint that make sense in the current environment. So I'm going to expand the app first. And let's take a look at the mobile app, which I highly recommend you check out. We go to a full screen view. It's got technical analysis tools, fundamental analysis tools built right into the app, built right in. to simplify things for you once you have an idea of what you want to trade on and in what direction you want to go fundamentally. So if I tap on this little tab down here, then it brings up a menu, and these are available on the web trader as well, all of these functions. I can trade on Market Buzz, which gives me immediate information on stocks. Since this is a technical analysis webinar, we won't pull that up, but the most trending stocks, it has up-to-date articles. You don't have to spend your time Google searching for information on the stocks that are available on our platform. It's right there. It web crawls and finds dozens and dozens of articles on each and every stock, and it puts them in the order of most trending. So you can find your fundamental news right there for trading stocks. And then look at the technicals after that on the chart. Featured ideas, analyst views, those are Forex signals coming from Trading Central analysts. So let's look at the analyst views, for example. So what we're looking at is US dollar strengthening against cryptocurrencies is the expectation in these signals. You can see it right away. Dollar pulling down Ripple, dollar pulling down Litecoin. Then we see something a little different with the dollar index. In general, against less riskier instruments than cryptos, the US dollar is pulling back a little bit right now, it looks like, after strengthening. Dollar index expected maybe to consolidate. It says intraday consolidation. Remember, I said the main push happened this week already with the US dollar strengthening, oil flying up, gold flying up. Now we see right now a little bit of a pullback, a wait and see type environment right now. So it makes sense that currently, after the dollar already strengthened today and yesterday and the day before, etc., that intraday we're talking about maybe some consolidation, probably some up and down ranging movements, trending towards, with this signal, more of a weakening movement on the dollar index or the US dollar in general against other currencies. So why would the Canadian be strong? Because oil in general is high. Canada depends largely on oil sales. And so Canadian dollar strong right now, US dollar consolidating after the big rush up this week with the US dollar. Makes sense, this pullback. Fundamentally, it makes sense. So as you start to look through the signals, you can say, okay, these signals make sense or they don't. And the ones that make sense to you, you might say, okay, let me look at US dollar Canadian. And so all I have to do is tap on it, and we get the signal. There's the technical analysis broke down for you. It has the support levels, the resistance levels drawn. We see it's ranging here on the 30-minute candles, exactly what we just said in our opening. It's ranging. After the big excitement, we see up, down, up, down, up, down, up. Look at that ranging movement. Right now, they're saying sell and take profit down at the support level right down here. This is the first take profit spot, and you see that that's support, support, support. This is the technical analysis done for you, okay? So it also has an alternate scenario that if the movement goes above this resistance level, then buy, they say, with your take profits at the next resistance levels up as suggestions, okay? So you can do a market move if the price is still where you like it for a sell with your take profits program down here, and you could put a pending order in case it reverses. We know it could reverse. We just talked about there's news coming out that we're not sure what it will be. If the news reverses things, you take your measured loss on the market move, wherever you have your stop loss, maybe right above this blue line, and boom, it hits your pending order above the blue line, and you go after profits in the opposite direction with your pending order. That's all technically based with support and resistance levels with a market move backed up by a pending order, but also it makes sense fundamentally. So you can get into this and trade on the signals after you've done a 5 or 10 minute review like we did of the fundamental headlines, then look at the signals and trade the ones that make sense to you. And you, more times than not, hopefully will find success with that. And so we'll analyze some of this stuff more on the full screen on the web trader. We'll look at some more of the features that are available that help you with risk management, that help you with signals, etc. Let's leave this meeting, and I'll stop sharing my phone. And let's go ahead and take a look at the web trader platform. Before we do that, are there any questions with what we just looked at? And yes, happy Women's Day. I guess it was yesterday. It's something new to me, actually. I'm from the US, and I don't recall growing up with Women's Day, but it's a good thing. Okay, I don't see any questions popping up. So let's go ahead and look at the web trader. So if you log in here in the upper right, you will be here. It's our web trader platform. If you're a client that's been with us, say for years, from a long time ago, you might not have this active on your account. You just ask and we can activate it so that when you log in from our main website, instead of being directly in your client area, you have the web trader platform available. And you can trade on your MT4 account, MT5 account, live account, demo account right from here. And from the mobile app that I was showing you, you switch between the accounts anytime you want. You see, real accounts, demo accounts. I know this says real account. It's a demo account by rule. I need to do my webinars on a dummy account. So this is a dummy account, but it's real prices and real strategies. So no worries. Now, what we're looking at then is we had a look at the Canadian, right? And if we're thinking there's some pullback right now on the US dollar strength and the Canadian was pulling it down, let's look at the Euro Canadian maybe and see, because the European Union probably has more reason to have weakness right now because they're more largely affected by all of this problem with being tied to Russia for energy, more so than the US. And so maybe there's more fear, and we've seen that through the week. The euro got really weak. So let's see what kind of pullbacks and movements there might be, and see if there's an opportunistic entry point on something where we know in the bigger picture the euro could have some more pressure, and at the same time, the Canadian dollar with oil being so high, even if it's pulled back some, the Canadian has reason to be strong right now with being a large oil export. I say large, not large in terms of global proportion of crude oil, but large in terms of their own GDP percentage. Crude oil is a large reason for the strengthening or weakening of the Canadian dollar from a Canadian perspective. So if we then look at the Euro Canadian, okay, we can see here on the 4-hour candles, the euro got pulled way down against the Canadian. You see the support levels we drew here. Okay, and by the way, if we look at the last couple webinars, sample trades that were proposed, if we look at the history, we can see here, Euro Australian, we sold on that. Why? Because the Australian tends to strengthen like the Canadian when oil prices are up, when commodity prices are up, because they're an exporter of commodities, and the euro was having problems for the reason we just said. And so we sold on the Euro Australian as an example, and it paid out well. We bought on gold. Why were we buying on gold even from high points? Because we understood why it was rising. Why did we buy on crude oil and one on that? Because we understood fundamentally why it was rising, and we looked at the technicals for entry points that we might prefer, right? As simulation trades. US 500, we sold on that, and we had a winner. We had a loser here on crude oil. It wasn't the right entry point. It happens. You're not going to win every trade. But if you look overall, since this war has began just in the past week or two, the payout has been nice with very small percent exposure risks relative to the balance on the account, right? And if you're gaining 5% or 10% in a week, or 3% in a week, that's not bad if you project that over a month or a year, right? And so, it doesn't always work out that way. The history I'm showing you there, but when you're able to combine the fundamental news with the technicals, many times it does work out that way. So if we want to look at the Euro Canadian or the Euro Australian, that can make sense. So let me go ahead. I know I cut myself off there. Let's look at that Euro Canadian. And again, if anyone has any questions as we go along, please let me know. So we're on 4-hour candles, and we see a major support level up here that was broken. Okay, this was a big breakthrough with the euro going above this price level. You see the momentum it took. You see the size of that breakthrough candle. The size of the breakthrough candle when it breaks through a resistance level is indicative of how much momentum there was fundamentally to cause that. And so it was big news. Something big happened to make the Canadian have that much momentum, or the euro to have that much momentum to break above this price level against the Canadian. Then it immediately became support. Support here. Support. 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 And then it took big news to break below it. Boom, breakthrough candle, and it becomes resistance again. Old support becomes new resistance once broken, because fundamentally something made that happen. So whatever made this price level break back below, unless that news story changed, then that news is still there, and that broken support then becomes resistance because of that fundamental news. So you actually, by looking at the candles, are seeing a story told about the timing of when big fundamental events occurred. This was a big fundamental event. I don't care what it was an event, and it caused the price to go up. Support was found. Then something happened to cause it to break down. We understand what that was. Oil price went flying up, and now it's resistance. Okay, and down went the euro as oil prices went up. Now, as things are starting to relax a bit, there's going to be talks today in Turkey between Russia and Ukraine. Maybe there's some hopes there'll be a deal. Okay, pressure eases. Oil pulled back down some. The Canadian weakens a little. The euro goes back up some. And up it goes towards the resistance level up here. Okay, so now let's switch to a larger candle. Maybe 1 day candles. We say, okay, from the 1 day candle perspective, this resistance level that we saw on the 4-hour candles is maybe not where our eyes should be. Maybe our eyes should be on the 1 day candles here. Okay, if we look at the 1 day candles, we actually see support, 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 up. Here's the resistance up here. Here's the support down here. Okay, we actually tested this resistance level, the old support level on the 1 day candles, tested it, and now pushed back below it. So we're actually right below this 1 day candle support. So we have resistance right above, is what I'm saying, on the 1 day candles. So now if we zoom back in to say 2-hour candles, now I can see the 1 day candle resistance level / support level that we saw more clearly on the 1 day candles. Now on the 2-hour candles, we can see it was tested and went back below it. And here we are sitting below that. And remember, we said it's kind of a wait and see right now. What's going to happen with the talks? What's going to happen with OPEC, etc.? Okay, so right now, maybe you feel like if I go on smaller candles, I can look for trending up and down. Fundamentally, it feels like there's going to be trending until big news breaks one way or the other. Okay, so you could look to say, perhaps I have a support level down here, this old resistance, that I could look to try and take profit from if it's going to pull down some. And my risk, if I'm selling here, would only have to be above this line here to be above that resistance level we saw in the 1 day candles. Okay, so this is the sort of thing you could be looking at as a potential move for maybe the Canadian to pull the euro down if maybe oil starts to bounce back up with the uncertainty after this pullback. Okay, so let's pretend that's the view you have. So I would pick sell, market move. I could use AvaProtect, by the way, protect it for a certain amount of time instead of, or in addition to, using a stop loss. That's up to you. You can protect it by the hour, and if you're doing a short-term trade, maybe it would be by the hour instead of the day. But it's not much cost to protect against any and all losses during the covered time period, if that's the route you want to go. Let's go the route of a take profit this time. So, and a stop loss, I mean. So if I'm going to put my stop loss above the 1 day candle resistance, maybe above this wick right here. So maybe I get just above 142. So 142.02 for my stop loss. 142.02. Take profit down here near this support that I drew. So maybe 141.05, just above that support level. 141.05. Okay, so now I look and I say, okay, I've got a pretty good ratio here. Almost 1.5, something like that, about 1.5 to 1 possible profit compared to risk. And then I can say, how much do I want to risk on this? Say I have an account of 20,000, and I decide, okay, I want to risk 1% on this move. Or maybe I'm being aggressive and I say 2% or whatever percent you want. I'm not here to tell you what percent you would risk per trade, but my point is you can calculate before you place your trade. The order window calculates for you your exposure. So once I have my technical analysis done and I know what price I want to get in and out, etc., now I can play with the trade size to make the risk what I want for that move. And so I'm working in reverse maybe. First setting up my technical analysis the way it needs to be for my strategy, then picking the trade size that makes sense for those entry and exit points. So quarter of a lot, I'm risking $74. And by the way, this is converted to my account currency. So I could go one full lot, and now I'm risking $293. So maybe I need to go a little less than one full lot if I want to risk only 1% of 20,000 or whatever it is that you're wanting to risk. Or maybe I say, okay, 1.5% is good, and I'm willing to risk 300. So then I say, okay, one full lot, I'm risking 290, a little less than 1.5% of 20,000. Again, I'm making up a balance of 20,000. I know that's not what's showing in my account. So, so this is showing me how much I'll risk on the move to the stop loss. Now, if it carries overnight, obviously there's some overnight interest charge, a small amount, but that's usually very minimal compared to the movement risk itself, depending on how long you're holding a position. But this is set up to be a short-term move, likely will come to fruition before the end of the day because it's not that big of a distance. So I'm looking here and maybe I say, hey, that's great. I'll go after almost $500 profit, and away I go, I sell. Okay, my risk management calculated for me. I understand the resistance level. This is a one-day candle resistance that it tested it and came back under it, and it became resistance again. So it's been tested and held now a couple times. So the technicals are on my side, maybe, and also maybe the fundamental news is on my side, because the Canadian still has some reason to be strong with the high oil prices, and the euro has reason to have some weariness going on with the central bank announcement coming later today, etc. Maybe this can move towards profit before that announcement even comes, right? Or maybe the announcement helps it, for that matter. We don't know. Okay, so that's one example. I have a request for gold, so let's take a look at it. Mender, green candle is a bullish candle, upward, right? And red candle is a candle that has dropped. Absolutely. Okay, so if we look at gold, we see similar movement with crude oil actually right now, where gold went flying up. It hit almost exactly the all-time high. By the way, let's go back. We looked at this in the last webinar. I want to reiterate. You could have had a pending order sitting ever since this all-time high was reached back months ago, last year, around 2070 per ounce. You could have put a pending order just below that high, just in case it ever got near there again. Because usually when you reach an all-time high, it acts as a point of resistance, even if only temporarily, even if it's going to break that all-time high, it's a point of technical resistance. And so look how perfectly this came up, hit almost exact to the penny almost, the all-time high, and pulled back $30 per ounce, $50 per ounce, $90 per ounce eventually by today. So that was an easy technical pending order that could have been sitting there for weeks and months just waiting for that to happen. Just wanted to point that out. Let's go now to what's happening currently. Here's that all-time high that was reached. Here's the pullback. Here's the new support level being reached right here. Okay. We see the gap up at the start of the week here. Gold gapped up. That's a sign that it might keep climbing that day when you see a gap up at the open over the weekend. It did, as expected many times, come back, refill the gap. It refilled the gap and then continued up. Okay, that's a technical strategy, by the way. When you see from Friday to Sundays, Friday's close to Sunday's open, a gap up, many times, not always, but many times that gap will be refilled before further movement. And we saw that happen here. It gapped up, found resistance, and then filled that gap back down, then continued the climb. It happens many times. Then it reversed from the all-time high, another easy move. And now it came back to the bottom of that gap and found support. Another easy move from a technical standpoint. If you're just blindly trading technical analysis, once it came down to Friday's close, the bottom of that gap, the last time it was down there, it tested it and went flying back up. Look what it did again. Came down to the bottom of that gap and up it went today. Okay? That was this morning. Tested the bottom of the gap, redid exactly what it did a few days back. Right back up. Okay? So now we're looking and we're saying it even broke above this resistance here. Resistance, resistance, resistance. Gold is above that now. So what's an easy move? Technically speaking, could this pull back down? Sure it could. But the indications are there. It broke through this resistance that it might test the all-time high again. Depends how the news goes today, right? Really does depend on how the news goes. But you could easily do a buy move here. You could protect it with AvaProtect for, let's say, 2 days. We'll do a protected move here because certainly gold could come back and hit a stop loss before going higher. We've all seen it, okay? But if you're bullish on gold in the bigger picture, but you're nervous about the entry point and that it could pull back first, and I'm not saying that has to be your view, but if it is, then AvaProtect might be an option you'd use if you say, okay, I think gold will test that high again, but I'm not sure it'll happen today. If that's how you feel, look, I can protect this until the 14th. That's into next week. Okay, carries through the weekend and goes into next week until it's showing me the exact time that the protection will end. So I'm risk-free other than the cost of the premium on this move. So maybe I say, okay, I won't be greedy all the way to 270, but let's go 2050. Okay, 2050 as a take profit. It's realistic that could happen. There's still a lot of inflation out there. So it's possible more inflation could come if oil shoots back up, then potentially gold could shoot back up. Stop loss, I don't need it yet. I can come back, put a stop loss when I get near the expiration of my protection. And then again, if I'm willing to put into this move, I don't know, 200, let's say, then I say, okay, the cost of the protection is 89, so I can go a larger trade size. 0.1, still less than 200, 0.12. Okay, that's about 200 cost. If that's what I was willing to put into this move, my potential profit is 540, more than double. And I get to wait this out for a number of days without any more risk, just waiting for this to hopefully go my way. And if it doesn't, then I've only lost the premium cost. And in that case, if it did pull way back the wrong way, then I could open a new trade, right? And have an even better potential for it to rise if it dropped to such a low price, if it went the wrong way with a very small exposure risk, because I don't have to have a stop loss way down there. I don't need any stop loss really until the 14th at this time. Okay. And so, and you can play with the take profit. I'm saying taking profit at 2050. Maybe I decide I'll go to the top of these wicks here, or the top of the base of the candles at 2057. Okay, so take profit 20. Let me move this over. 2057. Okay, now I've got about a 3-to-1 ratio potential profit, and still I'm not being greedy. I'm not going for the all-time high up here at 2070. I'm going at the top of the base of the candle. So you put the spot that makes sense to you, right? And then maybe I like this ratio, and I say, okay, I'll go for it. And there, I take a buy position. Now I'm protected by AvaProtect. I could sit back till the 14th. No matter how far this goes the wrong way, I'm not losing anything more. And so now I can be patient. And in a bigger picture, maybe I'm confident gold will go up. I'm not saying you have to be, but if that's how you feel, then this type of move might make sense. Any questions about anything we've covered? About AvaProtect, about the price levels we're looking at, anything? And you see here the ones that are protected by AvaProtect. It has the shield. If you click on it, it tells you it's counting down. I still have 98 hours and 20 minutes of protection left on this trade. Again, that's until after the weekend. So very cool features. Okay, I don't see any questions popping up. You know, if we're looking at indices, no one asked, but we'll look real quick. If we're looking at something like the US 500, okay, 30-minute candles. Let's go to something bigger, maybe bigger picture view. 2-hour candles. We see there's been pressure on the indices, pulling down. We'll see it better on 1-day candles. There's a huge pullback, right? Here's a pullback from way up here. It found support right here. We drew this line in the last webinar as a potential support level. Support back up here. It's like a staircase of support levels. And down it came. It tested this support level and a second time and it bounced up. I could see this maybe trying to rise to the next resistance level. Maybe a pending order somewhere up here to sell near the next resistance level could make sense with a small risk to the top side of that resistance if you think there'll be further rise before some type of decline back down. Okay, it's up to you. You have to read the tea leaves of the fundamental news, right? And decide, what do I think will happen in the short term right now with the movement? And then also, what do I think will happen in the bigger picture? And right now, there's been some easing of the tension until the negotiations. Maybe with a pending order up here, you could catch a nice price if you are bearish overall on these indices, maybe eventually pushing back down again. But you see ranging movement right now. If we go to 30-minute candles, you can see the ranging. Up, resistance, back down. Trying to find support here. It found support here and bounced. Perhaps that happens again. If you're scalping, maybe you're looking to see if it breaks this support, you sell. If it starts to uptrend on 5-minute candles, maybe you look to buy and take profit up here. Okay, that would require sitting in front of the chart, right? For short-term trading of that magnitude. We'd be looking at these little support levels and looking to see if this breaks above the little resistance on the 5-minute candle. Maybe you're looking to try and scalp a profit coming up if it confirms an uptrend for you. Or if it breaks this support, maybe you're looking to sell and scalp to a profit down here. Just some ideas, some suggestions. You could set that up with pending orders, by the way, as well. You could put a pending order here if it breaks this low point to sell with your stop loss back up. You could put a pending order if it breaks above this little resistance level here to buy with your stop loss back down and a take profit at the next resistance. So a couple pending orders there could give you a definite move on that movement. Just waiting to see on the 5-minute candles, which way does it break? Which pending order will it trigger first? And you can set that up because, again, that's a strategy for a day like today where we're not sure what the news will be. And so surround that 5-minute candle movement, the near upper resistance and lower support with pending orders on either side of those price levels and wait and see what happens. And that's minimal risk with your stop loss just back past those price levels if it does break through. All right, everybody. Thank you for joining. I'll give you a chance for any last questions before we end things. Yes, Leonard, you could put a stop loss on a pending order. Absolutely. Linda, I hope the strategies I've gone over are somewhat simple to understand. Every session is recorded. So if you missed something, you can go back and watch the recording. It'll be uploaded probably by later today, certainly by tomorrow morning on our YouTube channel. So you can go back and watch this session, and for that matter, lots of sessions that go through strategies like this. And I think the repetition will start to sink in, and it'll become very simple for you to understand the types of strategies we're going over. All right, everybody, thank you for joining. Until next time, good luck with your trading. I wish you luck on today's movements. I think we'll see some nice ones. Bye for now.